Coming up on today's show, why the trend in internet connectivity and e-commerce is a long-term trend that's here to stay. Plus, year-end investment moves to put on your radar. Kevin Carter, the founder at EMQQ Global, joins us next. Hello, I'm Stephanie Stanton with ETF Guide TV. A big welcome to everyone. If it is your first time here, be sure to hit that subscribe button and never miss any of our episodes. Well, around 85% of the global population lives in emerging market countries like Brazil, India, and China. And when you combine these enormous numbers with the rapid surge in internet connectivity and e-commerce, it provides a compelling investment thesis. Well, helping to analyze these key trends and how to participate in the growth is Kevin Carter, founder and chief investment officer at EMQQ. Kevin, thank you so much for joining us.
Thanks for having me.
Okay, so unlike most emerging market funds, your flagship EMQQ ETF, along with FMQQ and INQQ, all of these take deliberate steps to avoid industry sectors where there's little innovation and scant growth. Why is this approach so important compared to the typical emerging markets ETF?
The first thing is the traditional broad emerging market ETFs, the iShares, the Vanguard, the vanilla broad versions of emerging markets, they have a lot of problems. And the biggest problem by far is the large percentage of state-owned enterprises, Chinese government-owned banks and oil companies, as an example. And these are not really the best way to invest in emerging markets. In fact, it's been very hard for people to make money in emerging markets using that approach. The 15-year return for those products is basically zero. And so what I've been focused on over the last 16 years since I've been involved with China and emerging markets is tapping into the consumer story. It's the consumer, it's the people that are emerging, and they are becoming consumers, and they want stuff. They want more and better food, more and better clothing. They want appliances. They want to take a vacation and go to a movie, and they want their kids to go to college. And that's the story, and that's what's emerging. The problem is the indexes don't capture most of that story, and they're bogged down with all these government banks and oil companies. And so tapping into the consumer is really what investors ought to do. But what's happening right now is an incredible story of growth, because all of these billions of consumers, as you said, 85% of the world's people, and even more of the young people under the age of 30, emerging markets are about 90%. They're becoming consumers, but they're also getting two things. They're joining two other mega trends that we've been part of for a long time. The first one, beyond being a consumer, the next mega trend is the computer. And, I've had a computer for 30-something years now, but it's the smartphone that it's bringing the computer to the rest of the world for the first time. So it's not a desktop computer. It's a supercomputer in their pocket. Most of them are running on Android, and they cost $100, brand new, and getting better and more affordable every year. So the computer's coming to this huge population. And the internet, something that I first got in 1995, is now getting to the new consumers in India, in Africa, in Brazil. And because these consumers, they haven't had, what we think of as traditional consumption infrastructure. They don't have bank accounts with debit cards. They don't have Target stores. They don't have cable TVs. And so these new consumers are leapfrogging, and they're even more digital than we are. And it's been, frankly, I'm pretty sure the fastest growing sector in the world. And I think it will continue to be the emerging markets internet space.
Yeah, it is really amazing when you put it that way. Here in this country, we've been on computers, smartphones for decades, but you have this huge swath of people who are just entering into that. So it is pretty exciting when you frame it that way. Speaking of that, let's start. We're going to break down your ETFs. Let's start with the Next Frontier Internet and E-commerce ETF. That ticker is FMQQ. What are some countries, top holdings, and industry sectors we might find inside FMQQ?
Sure. So FMQQ is essentially EMQQ ex China. And so it gives exposure to, Southeast Asia, India, Indonesia, Vietnam, those types of places, as well as Brazil, Mexico, Eastern Europe, the Middle East. And And the reality is that, China's an emerging market in a traditional sense, but when it comes to the internet and e-commerce, it is the most developed market in the world by far. And China's e-commerce has driven the EMQQ story. It's been about 80% of the revenue in this sector has been from the Chinese internet giants, but there's a third wave coming outside of China. If you think about the way that the population of our planet first got computers and first got the internet, it really started in the United States about the year 2000, and we had this 15-year S-curve of growth as the FANG stocks took over our lives and our stock markets. The second wave was a China wave, which started about 2005 with Alibaba and Tencent. Baidu actually went public before Google. And now this third wave is coming, and it's what FMQQ invests in. And China's got 1.3 billion people and e-commerce penetration of about 25%. The other 45 next frontier countries, the FMQQ countries, they have 4 times as many people as China. They have 5.5 billion people. And whereas China's e-commerce penetration is 25%, in the other 45 countries, it's about 5%. So you have 4 times as many people, and they're basically in the first inning. And it's going to happen in a big way over the next decade. I know the world's got a lot of headwinds right now, and all sorts of problems, and a plague and wars and inflation and all of these terrible things. But my confidence in the FMQQ story, these other 45 emerging markets, has basically doubled in the last 8 months as I dug deep into the ecosystems in places like Brazil and Colombia and India and Pakistan. There's critical mass has been reached. The entrepreneurs are there. They're going to the best schools in the world, Harvard and Stanford, and then they're going to work for Google or Microsoft or Apple, and then they're becoming entrepreneurs and going home. They're getting funded by U.S. institutional investors. Berkshire Hathaway's been active in both Brazil and India, fintech investments. So they're getting funded by the best investors in the world, and they're having a ton of growth. And everyone that succeeds and where liquidity happens from an IPO or an acquisition, is creating dozens of new entrepreneurs who are taking the money they've made in their first success, and the ecosystems are cascading. And I suspect that by the end of the decade, we could have 1,000 publicly traded emerging market internet companies.
Yeah, it's amazing. I mean, really, to just see this unfold, it is amazing. It is exciting. You mentioned India. India's richest man, Gautam Adani, recently overtook Amazon's Jeff Bezos on the billionaires list as the creator of the India Internet Ecommerce ETF, and that ticker for you guys is INQQ. What type of wealth do you specifically see India producing, not just now, but in the future?
India is poised to create a lot of wealth in a lot of ways for a lot of people, including their own people. India has, if you made a list of pros and cons, the pros is pretty powerful. First of all, the country will be the largest in the world by the end of next year. That's the World Bank only recently accelerated that forecast. It was expected to be in 2026. Now the World Bank says India will pass China by the end of next year. So you've got the largest population. You have the youngest population. India has more Gen Z than the United States and China combined, over 600 million. You have the fastest growing economy in the world. The estimates right now are a little over 8% for the year. You have the fastest growing e-commerce market in the world. E-commerce has been growing almost 30%, just ahead of Brazil. And then you have a huge swelling middle class, which should increase a lot by the end of this decade. And finally, the government, it's a democracy, and that has some benefits, but there's also some bureaucracy involved. But the good news is the leader of the democracy, Modi, is all in on digitizing the country. His platform is Digital India, and they're have very aggressive goals and plans to, get the internet and India connected very tightly and digitize the population that's going to be the biggest in the world.
Wow, it is truly incredible. Kevin, as you go out and you talk to people, not just here with us, but others, are you getting a sense that people are really excited about this when you tell these stories?
Look, it's a good story, and it's a true story. And look, we've all lived it. We all got smartphones, and we know, you walk around town, you'll see what people are doing. They're on their smartphones and, increasingly doing everything on their smartphone. And so, it's something we've all lived. And when they, think about it and they realize that, every month, 7 million people in India are getting their first ever computer, and it's, in their pocket, and their first internet access, it's an exciting, good story. Now, the fact is, however, that the public stocks have been crushed in the last 18 months and are down, well over 50%. And so people tend to let the chart dictate how they feel about things. I prefer to look at the fundamentals, and ultimately the chart needs to be good for people to feel like they invested and they had a good investment. And I suspect that it will look very good for long-term investors, as it had looked before this big decline. There's just been a lot of even before the war and the interest rates and the inflation and all this, we had a pretty miserable couple of years of China-related drama and concerns about the Chinese government. So the whole sector has been down and out. But I think ultimately long-term investors, that can look past the noise, I think they get excited because this is where the growth is. And it's going to be the fastest growing sector, I think, amongst them, certainly outside of China for the next decade plus.
Yeah, my advisor telling me it's a long game. All right, let's shift gears completely now because people who are sitting on large unrealized losses in individual stocks from China or elsewhere should they look to tax loss harvesting? Explain what tax loss harvesting is for those of us who do not know, and do you think it's a smart year-end strategy?
Well, tax loss harvesting is a very important and good strategy for people to employ if they have taxable investments. And I know this because I was one of the pioneers of a strategy that's now called direct indexing, where you build your own version of the index and then you systematically loss harvest it so you can beat the index, and it works. So I'm very familiar with this strategy, and it's important to consider if you have taxable investments. And the idea is simply this: if you own Chevrolet and you're bullish on the auto sector, and you own General Motors, and this auto sector has a tough run and the stock's down 30%, you can sell it and create a loss, and then you might buy Ford Motor Company instead. And the idea being that you get the same exposure to the market, but you've realized a loss. And so in the case of say things like KWEB, a lot of people have the China Internet ETF, and like ours, it's down a lot. But what investors can sell, a fund like that and take their loss and then redeploy it to something not the same but similar. And in the case of that type of a swap of selling a China only focused tech ETF like KWEB or CQQ, and rolling that into EMQQ or FMQQ, you're getting the same sort of emerging markets internet exposure. You've created a loss, and in that example, or either of those examples, you're also adding a whole lot of diversification that you don't have with just China. And you can also, if you want to even get more targeted, you can go into something like INQQ and just try to capture the India wave, which will be the biggest part of the third wave, if you will.
All right. Always great advice. Kevin, thank you so much for joining us. It is so great to see you as always, and we'll look forward to seeing you again soon.
Thank you.
All right. And to learn more about investing in e-commerce and internet stocks in emerging and frontier markets, be sure to check out EMQQGlobal.com. And if you liked today's discussion, post your comments below this video. We would love to hear from you. And don't forget to subscribe to ETF Guide TV. I'm Stephanie Stanton. Thanks so much for watching.